Welcome, everybody. Welcome to this week's edition of Sales Boomerang University. My name is Spencer Schultz. We are going to be going over the 201 course today, going through, hey, how do I become a lender for life? How do I gain access to credit alerts? And how do I utilize these credit alerts to make sure that I am on top of any potential activity that my database is partaking in, guys? We're going to be going through here and making sure that we're on top of any sort of action and how we follow up and keeping ourselves consistent in that pattern. Today, we are going to be diving on in and we'll get right to it, guys. We got the old PowerPoint, the old slide deck here, some visual aid, my friends. So with that being said, hey, how do we become that lender for life? And we're going to go over a couple key things. How do we grow and retain our database with core credit insights? How do we use Sales Boomerang to stay ahead of the market? How do we make sure we get closure of every conversation and insight? FOC letters, what are those? When are those going out? How do we utilize those? As well as, hey, where are the best practices in marketing, automation, sales cadence? How do we make sure we're tracking conversions? My name is Spencer Schultz, as we just touched on, training and adoption strategist at Sales Boomerang. My job is to make everyone here as comfortable and confident as possible with the insights that you're receiving and how to turn these digital, intangible into a tangible conversation and loan with a potential borrower, a former borrower, a prospective borrower, all of it, guys. Our goal here is no borrower left behind. We want to make sure that everyone who wants to be a homeowner is not just a loan owner. We want to make sure that everyone is in the right loan at the right time and they're not just kind of getting that off the rack, plain, men's warehouse suit. We want to be giving you that custom tailor experience from Sales Boomerang to you as an LO or a lender, as well as from lender to borrower, to make sure that we're doing things like maximizing goals, maximizing investment strategies, setting ourselves up for success in the short term and the long term here. Again, guys, we're going to touch on it. We're being notified anytime someone in our database is ready to buy, sell, or refi. Today, we're going to be touching on specifically when we know that someone is shopping. We want to work with 100% relevance. We want to make sure that we're cutting to the chase, we're streamlined, we're efficient. We are lean, mean data advisor machines, or data mortgage advisor machines, I should say. So here we're going to be executing 11 mortgage transactions throughout our lifetime as a borrower, right? We touched on this number last week. We want to keep 11, one and one in mind. Wherever you enter, wherever you see, and today we're going to be talking about credit pulls, credit triggers, where someone is shopping. Maybe they're looking for that second purchase. Maybe they're looking for that third purchase. Maybe they're looking to tap into their equity. How do we make sure that borrower is getting put in the best situation and look towards their future, providing that custom tailored experience as opposed to that off the rack experience, guys? We always want to be considering when our database is active, when they are getting their credit pulled, when they are working, when they do have a possibility. We always want to be looking not just at our past clients or just our prospects. We want to look at those who we're working with today in our pipeline and processing and underwriting. Those who aren't qualified or were rejected because of credit qualifications. We want to be looking at adopted databases from our referral partners. How are we able to manufacture trust in those relationships, as well as, hey, how are we able to provide that value to our referral partners? We're going through trying to speak to prospects, speak to past deals, try and find loans ultimately. And it can be a maze out there. And what Rocket and Zillow have, and have, is the insight. Okay, who's shopping? Who improved their credit score? Who had that life event? Who has equity? Who's listed their home for sale? Where we're going to go further, guys, we know where to look, our database, the signal. We get the same insight that Rocket and Zillow have. Then what's the strategy? How do we apply a series of strategies between rate and term refinancing, cash out refis, between moving up, between investment properties? How do we help people establish wealth, pay off their home faster to be a homeowner instead of a loan owner? And how do we ultimately help them save up for retirement and get to that awesome golden point? Again, guys, we're looking at this activity. We're looking at credit pulls today. We're going to see when the Alice we spoke of last week, had her credit pulled by another lender when she's working. Okay, she's selling her home. She's working in that way. How are we going to ultimately make ourselves visible to these situations and these scenarios so that we can work through and provide that value for Alice? So today we're going to be focusing, my friends, on the middle section here, the core credit alerts. How are we going to be utilizing the best practices to make sure that when someone is shopping, they do have their credit pulled by another lender, or they are ultimately raising up their credit score to take action, to help them see the full smorgasbord. So one piece that I do want to touch on before we dive on in, guys, is that, oops, jumping around here. Okay, there we are. We have our FOC letters going out, our firm offer of credit letter. What that means is that we are sending out an automated compliance letter that is in compliance with not only your lender and the disclosures needed, the state necessary language needed in cases, as well as how are we going to comply with the bureaus, with TransUnion, Equifax, and Experian, to make sure that we are, saying what we're going to, putting our word and standing up alongside of it. So making sure that, hey, when this letter goes out, it's essentially a call to verify pre-approval letter, that someone is pre-approved. You can't say could have been or could be or might be, things like that, but you can say call to verify certain details, things of that nature. Our most successful lender partners use these as marketing because it is going out. A borrower will receive this on average 10 days after you receive that credit alert, after you get that mortgage inquiry, which we'll get into, or after that credit improvement, which we'll get to as well. So these are going to be automatically sent out. Be aware that they exist, and you will see inbound business from them. With that being said, last week, guys, we went over our tier 1 alerts, our non-credit core alerts. We went through equity. You can identify how much tappable equity a borrower has and set a minimum home value threshold to have that proactive conversation. We went through listing, every for sale by owner, that we can provide that value to our realtor friends. We can show every time someone in any zip code in the United States of America, Hawaii, through Alaska, through Maine, through Florida, through Washington, and everything in between, sea to shining sea, has listed their home for sale as long as it is on Al Gore's World Wide Web. Rate watch. Hey, who can simply reduce their interest rate? Who could refinance, get into a lower rate and term, save monthly? Then we talked about reverse mortgage, about HECM, which also considers rate now as well. And we're going to be looking at, hey, how can they put away for retirement or put themselves in the best position? Can they refinance their HECM, which is something that's a little bit more fruitful as a lender? There's only about 50,000 reverse mortgages done, somewhere around 49,000 over each year over the last 5 years. So about in the entire nation, 250,000. But over the last, 10 plus years, there starts to be a couple million, and then they're refinancing. You can usually refinance in a HECM every 18 months. How do we identify those opportunities? Today, we're getting deeper into the credit alerts. These are directly from TransUnion, Equifax, and Experian credit models, showing us when someone in our database is shopping around or has had a significant credit change that is going to allow them some activity. These are defensive. So what I want to touch on here, guys, 77% of borrowers are going with the first borrower they speak with. 77%, 4 out of 5 nearly, are moving forward with that lender. Almost 1 out of 5, nearly the rest of them, only 5% remaining, go with the second lender. So you've got about an 18% chance, according to the CFPB, about 1 in 5 chance of retaining that customer. If you're third, if you're last, if you're fourth, you've got about a 1 in 20 shot after that. So you better be second if you're not first. And guys, 82% of our borrowers are leaving us every year. How do we decrease that number? How do we increase our retention rate? How do we develop a more consistent pipeline and develop lender for life relationships? We're going to go through here and talk about those examples. Mortgage inquiry, number 1. You're able to see every time someone has their credit pulled, not for an auto loan, not for a credit card, not for a personal loan, but for a mortgage transaction in the last 24 to 48 hours. So basically, these come through every morning at 9:30 a.m. from the previous day. The bureaus push them to Sales Boomerang. So you'll be just slightly delayed. So if I got my credit pulled by a lender right now at 3:39 Eastern, December 12th, 9:30 a.m., most of the time, 9:30 a.m. the next day. So the 13th, I would get notified of this. This is your number 1 priority because this is a credit qualified and active borrower that is shopping today. So we can use this number 1 to see, hey, who's active, who's shopping, use it as that second touch mechanism. We can use this as fraud protection as well that we can offer to our clients, to our borrowers. Hey, we'll see if you get your credit pulled. There's no hard pull here. If someone has Experian, they pay for their report to see every inquiry. they'll never get an alert here. That's why, because we don't show their exact credit score, but we show a FICO tier. So we'll show a credit tier. If you need 620, it will only be 620 and above. If you set a parameter to 680, it will only be 680 and above. We give you that range, that, some 30 odd points there, that some 40 points to show between different tiers. And that you can kind of estimate their situation, their income, DTI, debt sometimes. But what this is important for, guys, when this happens, when an alert's triggered, we will know they are credit qualified. We don't have to guess. We don't have to say, all right, well, I've got to pull credit. First thing I do when I talk to this borrower, hey, all right, yeah, we talked for a minute. All right, let me run your credit. Make sure. No, you don't have to. Maybe, does that mean that they won't go buy a motorcycle and not tell us? And then we're, trying to go get this loan funded and suddenly everything's changed, which happens far too much. But ultimately that day, that conversation, you don't need to invoke that fight or flight response from a borrower, because even though the bureaus allow us up to 45 days from that first pull by a lender to have our credit pulled 8 total times with only 1 hit against our credit, usually that, 2-point hit. Borrowers might not know that. Hey, sometimes I might even forget that. If I'm going through a transaction of any sort, potentially, someone says, let me pull your credit, my immediate feeling that I get, even though I am a licensed mortgage professional, still is, whoa, not so fast. Take it easy. We don't have to get to that point. We don't have to invoke that response. That ends so many conversations and potential, especially if you're working on prospects or leads. You don't need to pull credit that day. I'll also tell you this. Other lenders know that this exists. So your competitor, Rocket Mortgage, or your competitor, whoever, ultimately, maybe the bank down the street from the borrower, might try and wait later into the process, which is increasing their risk to pull credit. That just cements that time is of the essence here. So with that being said, we also segment these into 4 codes. You can see on the right-hand side of the screen here where my cursor is, Joe Smith had his credit pulled for a home equity loan or a line of credit. That's the segment code that popped up for TransUnion, Equifax, or Experian when that credit pull came through. So with that being said, they are credit qualified. They are shopping yesterday, basically, and why they were shopping. Who would you rather talk to? How many leads do you want to call, or how many prospects or whatever would you trade to know that one potential conversation here, whether it's a previously funded loan or whether it's a prospective client or a referral or whatever it is credit qualified, shopping, and why they're shopping? If you don't call this by noon, I don't know that this, I don't know what to tell you. I don't know that this is the job for you. Speaking of which, when you do get to these conversations, we have an awesome opportunity. We have a class coming up here with the Sales Boomerang founder, Alex Kuznichin, with Dave Savage, the founder of our partner company, MortgageCoach, who we are joined with, as well as with Dave Vermillion, who is one of the most storied, one of the most tried and true LOs, most successful. You've heard of him if you've done any sort of research here, guys. And I'm going to pull up a little presentation on what that class is. It's called Meet the Market, and it's going to give us an opportunity to get ahead of 2023. This is a self-paced course featuring experts in the industry, guys, the best of the best. And we have it right here. So with that, Meet the Market, presented by Mortgage Champions. Guys, how are we going to lay down strategies? What do we do once we get to this point? Okay, I see someone shopping for a mortgage inquiry alert, or someone shopping for a mortgage transaction with another lender. How do I win that? Here's proven strategies in the rising rate environment. There's low inventory right now. Hey, the market's always competitive. Here's Alex, Dave, and Mr. Vermillion as well. We're going to be working here to make sure that we are in the best place possible. You can see Nicole here, our awesome digital events manager here, has 2 links for you in the chat. Meet the Market course info and registration, as well as if you want a detailed walkthrough, we have one coming through tomorrow on the 14th, a webinar with Dale, Alex, and Dave. Register below, get that free sort of experience and a deeper dive into what they're going to do ultimately. But it's a 6-phased learning track full of modules and interactive video courses that are going to show, how do I close? How do I get to that point in the relationship with the borrower? And how do I bring it home? How do I do things like shop with a borrower instead of allowing a borrower to shop you? If you display every option that they have, they're going to shop with you as opposed to against you. Again, it's video-based learning. There are some modules, they are streamlined. There's going to be a little bit of engaging content you can see to help quiz you, make sure that you retain information in there. You get a badge and a certificate upon completion. And hey, here's pricing per individual as well as lender pricing. If you're a branch manager watching this, or if you are in C-suite or an executive or in marketing, whatever it may be, if there's a subset of users of 25 plus that you want to take this course, and you can scan these QR codes on your screen in order to have a chat for it. But if there's 25 plus that you're looking to get in this course, then definitely reach out and get the lender pricing as well. So an outstanding opportunity to learn from some of the best in the industry. Dale, Alex, Dave have, 80 years of experience at this point, 60 plus years of experience, I'd say for sure, combined between the three of them. And that might just be between Dave and Dale, and then Alex's expertise. It speaks for itself. So awesome opportunity there to learn, to grow, to sharpen your sword as you are trying to work your way through and find the best opportunity for yourself as you develop your voice with these alerts. So again, guys, mortgage inquiry, I know they are credit qualified. I know they are shopping. I know why. You need to have this many touch points immediately. You should be calling, texting, emailing. You should be sending a MortgageCoach TCA. You should be sending a text with a video, whatever it is. You can automate this process through your CRM. The goal here is automation, guys, so that you get a credit pull from a borrower in the form of a Sales Boomerang alert that routes directly through an API into your CRM. Then in your CRM, that triggers a response that can be an automated text with a video or a MortgageCoach TCA. We integrate directly with MortgageCoach if you're a MortgageCoach user, so that boom, 10 o'clock in the morning, before 10 o'clock in the morning, they're getting that TCA. They're going to be able to see a breakdown. You're able to have a template that's comparing multiple loan options side by side, that you're going to be able to go break down and do these three key things, guys. You're going to compare multiple loan options. You're going to be able to display cost over time in the immediate as well as in the long term. And then you can apply strategies. How do you apply reinvestment strategies? How do you do debt consolidation? How do you determine your net worth as a result of this transaction? How do you look at your freedom point? When are you going to pay off your home based off of that? So here's an example, guys, of a debt consolidation. So if someone's looking to go maybe tap into their equity, pay off some bills a little bit. All right, here's what you're currently in, displayed in the left panel side here where my cursor is, versus a 30-year cash out, versus using some of your equity to do a principal reduction versus an investment or reinvestment strategy here. So I can see, all right, here's the current rate. I could highlight that, can look at the monthly savings. Any of these three transactions are going to save this borrower $1,100 monthly immediately. You've already taken the room out of the air out of the room for the conversation. What do you respond to that as a borrower? Basically any action I take is going to put $13,000, $14,000 back into my pocket a year. Here is the cost over the first 5 years. You can factor in costs. You can factor in property taxes, hazard insurance, all of those good things. Here's the implicit savings over a 5-year period. And hey, here's the cool part. Here's the freedom point, guys. In this current product, this person's got 18 years and a month remaining. Well, if they're to do a principal reduction, which saves their monthly payment, lowers their monthly payment, and shaves 6.5 years, almost 7 years off of their freedom point, off of becoming a homeowner free and clear, getting closer to retirement, having that awesome alternative possibility open up, then why would you not want to act in that direction? Or through the investment strategy, same freedom point, look at the net worth displayed in the visualization on the right-hand side, able to show this is going to put an additional $138,000 into your pocket versus what you're currently in. That's impact. That's powerful. That's how we're going to show that mortgage inquiry, that action that you're taking, guys, shop with me, don't shop me. Let's shop together. Let's look at different options. Go through this process. What does Rocket Mortgage do? What is the vanilla bank down the street do that, has a couple LOs that watch a lot of Netflix do? They're going to show you one product. You ask, you click, here's a 30-year, FHA. Here's a 30-year conventional. Here's a reset at a lower rate. But it's not going to get into the strategy of accomplishing goals. It's just going to be that off the rack experience. So following up with that or in a text message, guys, you can simply do this. If you're an LO, you can take your cell phone out. You don't, and be yourself. You don't have to be all buttoned up and fancy. You want to look nice, make sure your hair looks all right, whatever. But ultimately, you don't need to have this uptight experience. You can factor in fun things from your own personal life. I'm a huge Ravens fan. I got some Ravens stuff here in the background here. Ravens took a big win over the Pittsburgh Steelers Sunday, their rival. First time in 5 games they beat the Steelers. Needed that one very badly. So I can say this. Hey, this is Spencer with SBMC Lender. Hey, I saw you had your credit pulled. Wanted to make sure that was indeed you. If so, was really curious to see what the best situation was for you. I know that there's a lot of questions about a possible recession, about where rates are going. Rates are starting to come down a little bit, and just wanted to make sure that we were buttoned up here. So, hey, wanted to make sure that I got you like my Baltimore Ravens I got right here, coming off a big win, and make sure that we are answering all options and heading into the new year strong, starting to collect some W's. How can we find a W like my Ravens got just for you in this situation? I've set aside some time for you for a mortgage health review tomorrow at noon. We always want to give a hard deadline. And I'm looking to hear from you then. If there's a better time, shoot me a text. If not, I'll hear from you tomorrow at noon. Thank you so much, Joe. Have a great day. 30 seconds, personalized, had a little fun with it. Acknowledged, this is the new year's coming up, whatever the current situation is. You don't have to be a robot about it. You can be genuine. You can be authentic. You can be yourself. And guys, how do we set ourselves up for success if we are let's say a retail lender or someone that relies on, referral business a ton, and as opposed to, let's say, consumer direct? It's a little bit different of a story here, but I guess it really applies no matter what. So when you're going through the process, set the expectation with the borrower. Hey, yeah, we have free fraud protection. Hey, we'll see every time, someone pulls your credit, make sure it was you. We'll verify for you, free of charge. It's a service at SBMC Lender. That's what we do. So expect to hear from me. Of course, we want to set the expectation. We talked in the last week about equity alert, listing alert, rate watch, all that good stuff. So you want to set that expectation. Hey, this isn't the last time you're going to hear from me. We have the top tech in the industry. And this can just be, hey, hypothetically, you're going through a first-time home buyer. So, 30 years old, 25 years old, and they're going through their first experience. Hey, we really care about you owning your home as opposed to owning your loan. We want you to, accomplish all your goals, pay that loan off. This isn't the last time you're going to hear from me. Take down my number. We have free fraud protection. And we also do annual mortgage health reviews to make sure anytime there's a possibility that we're able to give you that next step to reduce your monthly payment, to help consolidate debt, or just put you in the next best situation. Maybe you're looking to move up. So setting that expectation when you go through with this. So maybe you are consumer direct. Maybe you are trying to establish trust, but you can do so a little bit by not having to pull credit immediately. But as you're working in that capacity, you want to make sure that you let that borrower know you will be hearing from me again. We are looking to help you in that next phase. With that, guys, we also have our EPO alert that's going to contact borrowers. We're going to contact borrowers when we see that they just funded a deal with us. We funded one, let's say back in, September at, a little over 7%. And let's say rates jump down, hopefully sometime before this or anywhere, in that 6-month period, but jump down. We're at 6.3 right now, somewhere around there, according to Optimal Blue. Let's say it's even more drastic. Let's say rates went down to 5.5% next week, which would be incredible. But then guess what? Joe gets his credit pulled by another lender. We're going to highlight that in red. We're going to categorize this as an EPO. This is even higher priority. This is a newly funded loan. We're going to help prevent that fee that you incur from, if you're someone packaging these off, then that EPO is going to be crucial to save. So instead of seeing that 3 days before funding, you're going to see that as soon as that credit pull occurs. And next year, there's going to be a ton of these. People that close in the high 6s and the low 7s, as rates are supposed to come down, low 5s, hopefully get into the 4s before the end of the year next year at some point, hopefully getting into 4 or 5 territory. You're going to see a ton of these. You're going to see this opportunity. It's going to be common. And again, you set that expectation. We'll see if there's fraud protection. We'll see if there's a better program for you. We'll contact you and let you know. So that they're again active. That they are previously funded in that early payoff period and how to ultimately help them out. So same deal there, providing that value. Next one is a little bit more proactive as opposed to reactive, guys. Credit improvement. We like to say turn them down, but don't turn them away with credit improvement. We're going to take your credit repairs off your shoulder, so to speak. all right, Joe Smith and I are talking. We end up pulling credit on a purchase he's looking to do, and his credit score is not high enough. He's in the high fives. I look over his credit report, say, all right, got some high utilization right now, pay off a little bit of debt. You got a couple inquiries that should be coming off. Joe, I'm going to let you know the day you become credit qualified. I'm going to let you know as soon as that's possible that you can partake in that. So you set that expectation again, that you can follow through with this deal. Then you're just the good news delivery man. And Joe doesn't have to worry about logging into Experian and logging into Credit Karma or whatever apps he's got. You, the LO, with access to this information, are going to keep tabs on his credit without pulling on it and let him know as soon as he's qualified. And then good news delivery man. Hey, Joe, I told you I'd give you a call. Congratulations. You did a great job. Hey, were you still looking for that place in Tempe or in Scottsdale? Awesome. Well, I know a great realtor over there. Let's go see if that's still in the market or if something else in that area. You mentioned you needed to move for work, and let's get you pre-approved, show your buying power. Got a couple different scenarios I want to go over with you to show how we can accomplish some different goals. Easy, guys. Easy, easy, easy. This is a huge factor for Q1 of 2023. As we're still waiting on rates a little bit, but people have racked up a ton of debt coming out of the holidays. Q1, Q2, set that expectation with people. Let them know that when they are credit qualified, you'll be able to help them out. Plus, you can also let them know when they take a huge bump from, let's say, 680 to 740 plus, they paid off some debt. They got into a better situation. They got a higher paying job. They have a different slew of loan products that they can choose from, different programs. They probably have more, income to be able to toy with the idea of an investment property or something of the sort. So you can have that proactive conversation as well. Next week, we'll get into the prescriptive scenarios, guys. We want to do 3 key things here. Compare multiple loan options again, short-term and long-term cost and goals, and then how do we achieve financial freedom or become debt-free? We went through these a little bit. We always need to consider contact strategy, guys. With these, speed is important. Again, I must contact this borrower in every method, every channel of communication that I have, every medium, urgently. I should contact this person before 10:30 a.m. really. First thing in the morning, I'm checking my mortgage inquiries and my EPOs. Credit improvement, definitely want to be on top of those. Wouldn't say those are as urgent as someone who's credit qualified and shopping. You know that they're shopping. So who would you rather speak to? Get on top of it immediately. You really want automated messaging to go out through your CRM to generate that business. But if you're still working, manually yourself, that's quite all right. 5 minutes of time. And again, we do have the Meet the Market course to understand conversions. Nicole was kind enough to drop the link in the chat there. So sign up for that and you will find much more detail. We also have the MortgageCoach YouTube that has hundreds and thousands of hours of top producers sharing strategies for what they do in the high rate environment, what they do with buy downs, what they do with open houses, or gaining new referral partner relationships, or how to take them to the next level, everything of the sort. So check out MortgageCoach on YouTube. There's hundreds and hundreds of hours of actual top producers, not just what sounds good on paper or what, this company that we subscribe to think works in the real world, but it doesn't. It's real LOs that are closing loans today, guys. Finally, we set the expectation. We've talked about a ton today that borrower will be hearing from you no matter what. When we get them, set the expectation of the next loan. You're going to follow up with them every 4 months, every 6 months, or when something changes in the market, then send them a calendar invite, send them a reminder, schedule an email from far out that's going to touch base with them about it. Take notes in your CRM, do all of those things, guys. Again, if you don't call, you're not going to close the loan. If you don't follow up on the alert, if you don't ask a borrower, guys, you're not going to know. So have they considered an investment property? Have they considered using their equity to create equity? Have they, through a construction renovation loan, have they considered debt consolidation or a reinvestment strategy or a principal reduction? Get closure out of every alert, guys. Greens, yellows, reds, same thing as last week. We need to take that closure. What is the next step? When am I contacting this borrower next? Is it a green and I'm contacting them tomorrow? Is it a yellow and I'm contacting them when rates hit a certain point or when they cross a certain equity threshold? Reds, next time there's relevant information, there's nothing I can do for them today. Get that closure, set that reminder, take your notes. With that, thank you so much for joining us. This recording will be sent out afterwards. Join us next week for Sales Boomerang 301. And these are recurring every single week, my friends. First, second, and third Tuesday of every month. Sales Boomerang 101, 201, 301. Earlier today, we had a market relevant session. Usually those are the fourth Tuesday, but because of the holidays, we moved that up. You can find that on YouTube. You can find that in the Sales Boomerang Resource Hub, everywhere in between. Thank you so much. Go help some people, go close some loans, my friends.